SA 705 Modification to the Opinion in the Independent Auditor's Report. Objective of the auditor or circumstances when a modification to the auditor's opinion is required. As per SA 705, the objective of the auditor is to express clearly and appropriately modified opinion on the financial statements when a. The auditor concludes, based on the audit evidence obtained, that the financial statements as a whole are not free from material misstatements. B. The auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statements are free from material misstatements. Types of modified opinion: a qualified opinion, an adverse opinion, a disclaimer of opinion. Which type of opinion is appropriate? The decision regarding which type of modified opinion is appropriate depends upon a. The nature of the matter giving rise to modification, that is, whether the financial statements are materially misstated or, in case of inability to obtain sufficient appropriate audit evidence, may be materially misstated, and b. The auditor's judgment about the pervasiveness of the effects or possible effects of the matter on the financial statement. Definition of pervasive, only for reading purpose, a term used in the context of misstatements to describe the effects on the financial statements of misstatements or possible effects on financial statements of misstatements, if any, that are undetected due to inability to obtain sufficient appropriate audit evidence. Pervasive effects on financial statements are those that, in auditor's judgment, a. are not confined to specific element, account, or item of financial statement. B. If so confined, represent or could represent a substantial proportion of financial statements. Or C. In relation to disclosure, are fundamental to users' understanding of financial statement. Meaning of qualified, adverse, and disclaimer of opinion. Qualified opinion. The auditor shall express a qualified opinion when a. The auditor, having obtained sufficient appropriate audit evidence, concludes that misstatement individually or in aggregate are material but not pervasive to the financial statements. B. The auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, but the auditor concludes that the possible effects on financial statements of undetected misstatements, if any, could be material but not pervasive. Adverse opinion. The auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, concludes that misstatements individually or in aggregate are both material as pervasive to the financial statements. Disclaimer of opinion. A. The auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, and the auditor concludes that the possible effects on financial statements of undetected misstatements, if any, could be both material and pervasive. B. It's just for reading purpose. The auditor shall disclaim an opinion when, in extremely rare conditions or circumstances involving multiple uncertainties, the auditor concludes that, notwithstanding having obtained sufficient appropriate audit evidence regarding each of individual uncertainties, it is not possible to form an opinion on the financial statements due to potential interaction of uncertainties and their possible cumulative effect on the financial statements. Changes in the audit report format when there is a disclaimer. A. Changes in the opinion heading. Auditor should use "we were engaged in audit" instead of "we have audited." B. Auditor should use the statement that "we have not been able to obtain sufficient and appropriate audit evidence to base our opinion." Auditor should use "we do not express opinion on the financial statement." B. Changes in the basis for opinion paragraph. Auditor should include only reasons for modification, general points regarding compliance of essays, independence and ethical requirements, etc., are not included in the paragraph. Changes in auditor responsibility paragraph, a statement that the auditor's responsibility to conduct an audit of the entity's financial statement in accordance with standards on auditing and to issue an auditor report. Consequences of inability to obtain sufficient appropriate audit evidence due to management imposed limitation after the auditor has accepted the engagement. If, after accepting the engagement, the auditor becomes aware that the management has imposed a limitation on the scope of audit that the auditor considers likely to result in need to express a qualified opinion or to disclaim an opinion on the financial statements, the auditor shall request the management to remove the limitation. B. If management refuses to remove the limitation, the auditor shall communicate the matter to those charged with governance unless all of those charged with governance are involved in managing the entity and determine whether it is possible to perform alternative procedures to obtain sufficient appropriate audit evidence. If the auditor is unable to obtain sufficient appropriate audit evidence, the auditor shall determine the implications as follows. A. If the auditor concludes that the possible effects on financial statements of undetected misstatements, if any, could be material but not pervasive, the auditor shall qualify the opinion. Or, if the auditor concludes that the possible effects on financial statements of undetected misstatements, if any, could be both material and pervasive, so that a qualification of opinion would be inadequate to communicate the gravity of the situation, the auditor shall withdraw from the audit where practicable and possible under applicable law or regulation, or if withdraw from audit before issuing the auditor's report is not practicable or possible, disclaim an opinion on the financial statements. If the auditor withdraws as contemplated above, before withdrawing the auditor shall communicate to those charged with governance any matter regarding the misstatements identified during the audit procedure that would have given rise to modification of opinion. Now, this is the table on the same concept that we have already read before. So, like inability to obtain sufficient appropriate evidence, request the management to remove. If the management accepts, removes, then proceed with the procedure. If the management refuses to remove the limitation, then communicate to those charged with governance, and still unable to obtain sufficient appropriate audit evidence, then possible effects, if material but not pervasive, then qualified opinion. Possible effects material and pervasive, then withdraw from audit engagement or disclaimer of opinion. Essay 706, Emphasis of Matter Paragraph and Other Matter Paragraph in Independent Auditor's Report. Emphasis of Matter Paragraph, meaning a paragraph included in auditor's report that refers to a matter appropriately presented or disclosed in financial statements that in the auditor's judgment is of such importance that it is fundamental to users' understanding of financial statements. Emphasis of matters paragraph in auditor's report. If the auditor considers it necessary to draw users' attention to the matter presented or disclosed in financial statements that in the auditor's judgment is of such importance that it is fundamental to users' understanding of financial statement, the auditor shall include an emphasis of matter paragraph in auditor's report, provided the auditor would not be required to modify the opinion in accordance with SS 705 revised as a result of the matter, and when SS 701 applies, the matter has not determined to be a key audit matter to be communicated in the auditor's report. Separate section for emphasis of matter paragraph. When the auditor includes an emphasis of matter paragraph in auditor's report, the auditor shall include the paragraph within a separate section of auditor's report with an appropriate heading that includes the term emphasis of matter. Include in the paragraph a clear reference to the matter being emphasized and to where the relevant disclosure that fully describe the matter could be found in the financial statements. The paragraph shall refer only to the information presented or disclosed in the financial statement. Indicate that the auditor's opinion is not modified in respect of the matter emphasized. Examples where emphasis of matter may be necessary. An uncertainty relating to future outcome of exceptional litigation or regulatory action, a significant subsequent event that occurs between the date of financial statement and date of auditor's report. Early application where permitted of a new accounting standard that has material effect on the financial statement. A major catastrophe that has had or continues to have a significant effect on entities' financial position. Rishu. Emphasis of matter paragraph in is not a substitute for a modified opinion in accordance with this 705 revised when required by circumstances of a specific audit engagement. Disclosures and financial statements that the applicable FRF requires management to make or that are otherwise necessary to achieve fair presentation or reporting in accordance with SA 570 revised when a material uncertainty exists relating to events or conditions that cast significant doubt on an entity's ability to continue as a going concern. Other matter paragraph, meaning a paragraph included in the auditor's report that refers to a matter other than those presented or disclosed in financial statements that, in the auditor's judgment, is relevant to users' understanding of audit, the auditor's responsibilities, the auditor's report. Auditor should include an appropriate matter in other matter paragraph provided it is not prohibited by law or regulation, and when SC 700 applies, the auditor has not determined to include above matter in the key audit matter paragraph. Examples of other matter paragraph SA 510, SA 600. Drafting of emphasis of matter. We draw attention to Note X of the financial statements, which describes the effects of fire in the company's production facilities. Our opinion is not modified in respect of this matter.